Good afternoon, ladies and gentlemen. My name is Michalis, and I'm one of the market analysts here at HF Markets. We've seen one of the most volatile days in recent history. If we're looking at the stock market decline in the US, it's the strongest stock market decline that we have since the first breakout and lockdown of COVID-19. We're looking at Asian stocks, ladies and gentlemen. We're looking at the strongest decline that we have seen since the 1980s. So we've got a lot of volatility. We have a lot to talk about. People have already sent me a lot of questions in regards to if this is a stock market crash. Is it just a very simply a repricing due to the NFP data? Some people have messaged me and said to me, why are we seeing such a big decline? And also some of the more advanced traders and more experienced traders have messaged me saying, why are we no longer seeing traditional correlations? For example, the correlation between the US dollar and the US bond yields and the stock market, or for example, the correlation between the US dollar and gold. So these are all aspects of the market that we're going to look at today. Now, of course, today, as part of our live market analysis, we will be looking at indications because people want to know what signals there is, what the signals are currently indicating, potentially whether we're looking at a buy or sell speculations. I've got some people saying buy or sell. This is something we're going to be looking at throughout today's event and live analysis. But we're going to get a real good understanding of the signals, of the indications, based on these factors, where we can potentially be speculating, potentially where it's relevant to be putting stop losses and take profits, to look at different theories based on this. But what exactly is driving this price movement, ladies and gentlemen? Because we're going to do an in-depth analysis, a really strong analysis, so people really know how to predetermine where the market is going to move. Because we're looking at, like I said, the most volatility that we have seen. If you're looking at the US market, it is the strongest volatility that we have seen since the first lockdowns of COVID-19. So we're going back, ladies and gentlemen, 4 years ago. And if we're looking at the Asian market, such as the Nikkei 225, such as the Hang Seng Index, for example, and other Asian indices, we're looking at the strongest stock market crash that we have actually seen since 1987. So we're going back 35 years late, more than 35 years. So we need to know exactly what the indications are, what's driving the price, and what strategies we can take into consideration to determine how the price is potentially likely to move. And this is all being triggered, ladies and gentlemen, from the latest NFP data. We had the non-farm payroll data on Friday, ladies and gentlemen. Let's actually go to the calendar together. And we'll go to Friday. Let's filter out so we can see only the news that we want to be seeing for Friday. And if we go to Friday, we can see here the unemployment rate in the US. It increased from 4.1% was the latest announcement from the previous month. If we're looking at the 6-month average, which is even more important, it's actually 3.9, it's not 4.1. So we suddenly, unexpectedly, are seeing a much higher unemployment rate than the previous month. We have, on the third consecutive month, seen the employment sector deteriorate, and we're significantly higher than the 6-month average as well. If we're looking at the NFP figure, it's the lowest NFP figure that we have seen since February of 2021. So again, that's going back more than 3 years, ladies and gentlemen. So we're now suddenly seeing the employment sector really deteriorate. So what's being priced within the market? Some people are potentially pricing in a global recession. Most economists are stating we don't yet have indications of a global recession, but we've definitely seen really strong indications of economic slowdowns or potentially some sort of economic contraction. In addition to this, we are in a very uncomfortable situation now, should we say, as economists, where we really need to see interest rate cuts in order to support the economy and in order to stop a, should we say, a harsh landing. But we don't have an interest rate decision in the month of uh, August, and the interest rate decision that we're going to see next month is actually in the very last week of the month. So it's like we're not going to have an interest rate decision for 2 consecutive months at the time now where we actually need an interest rate cut. There was some speculation that there was going to be an emergency meeting and interest rate decision by the Federal Reserve. They have already come out and confirmed that that's not going to be the situation. So we've seen the employment sector deteriorate. We've now got indications of a potential economic contraction or at least an economic slowdown. We've got confirmation that we're definitely not going to see an urgent interest rate cut over the next 2 months. Warren Buffett and Berkshire Hathaway, one of the most important companies in the world, have already come out and said on Friday that number one, they sold 49% share of the stocks that they hold in Apple. 49% of the shares that they hold in Apple, they have sold. They've also sold 15% last week of the shares that they hold in Bank of America. The week before that, they sold 9% in addition to that. So, a very large sell off there by Berkshire Hathaway, one of the most global companies in the world. And ladies and gentlemen, that's having basically a domino effect throughout the whole of the stock market because they're selling equities. And already Warren Buffett has come out and said that he's switching equities for cash. And we can see this throughout the market. If we're looking at the Swiss franc and we look at other safe haven assets, such as, for example, the Japanese yen, one of the best performing currencies within the market. But we're going to look at that in a moment, ladies and gentlemen. This is why we're seeing the stock market crash, ladies and gentlemen, because we've seen suddenly the indication of economic slowdown. We're not going to get any interest rate cuts for 2 whole months, almost. NFP data was extremely poor. And the last thing I will say is we're getting indications, and the advice from the US and the United Nations is that there is almost certainly going to be a strike from Iran and also from Lebanon on Israel. And of course, that's going to massively escalate tensions, political tensions in the Middle East. And there's already some speculation that other countries can be getting involved potentially. That is, again, massively bad news for the US stock market and the stock market, generally speaking, overall. But, ladies and gentlemen, we're going to start off with gold. Now, the first thing I'm going to say is gold is actually one of the assets where we're not seeing the traditional correlation that we tend to see. We're not seeing the traditional correlation where we see the US dollar increase in value and the price of gold increasing in value. So basically an inverse correlation that we tend to see. And also to a lesser extent, there is also an inverse correlation with the US stock market and the global stock market and gold as well because of the risk appetite correlation there. We haven't seen that. We've seen untraditional price movement. We have seen, if we're looking at the 2 hour charts, we saw the price of gold decline on Friday. We also saw the price of gold significantly decline today so far as well. If you're looking at the most recent highs, the price of gold traded almost, well, just over 4.5% below that. Now we are seeing a rebound. Now, this is a very clear indication of the rebound, ladies and gentlemen. And also, when we do get inverse correlation, especially such a strong inverse correlation like the US dollar with gold, and it doesn't follow the traditional price movement, then a lot of the time we can get a correction. So it's not something which is unknown within the market. But we don't yet have an indication, though, of stronger, longer term upward price movement. Why don't we have an indication yet? And I'll explain exactly. Because, ladies and gentlemen, here we've got our sentiment line, our trend line. We've got our 75 bar exponential moving average. Here we have our sentiment line, which is the 100 bar simple moving average. And then in addition to this, we've got the RSI on a 18 bar exponential, on an 18 period as well. Now, if we're looking at the sentiment line, trend line, the price is very clearly trading below both. If we're looking at the RSI, again, it's very clearly trading below both. So if we're purely looking at technical analysis, of course, we've got an indication of downward price movement. Or if we're not going to get an indication of downward price movement, the indication based on technical analysis is that we're going to get a reoccurring price range, so reverting price movement up and down in the sideway corridor between the most recent low and most recent high. If we go back as well, that's definitely the very clearly the traditional price movement and the clearly formed price range. For example, if you're looking at this area here. So if we look at technical analysis, we've either got indication of that corridor or we have an indication of a continued bearish market downwards. So those are the two aspects of the market that we can take into consideration in terms of technical analysis. The other thing, though, ladies and gentlemen, like I very clearly said, the US dollar is significantly low. US bond yields are significantly lower as well. So there is still indication that this can potentially correct. Now, somebody's going to say to me, if it's going to correct, what are the first targets that we can, of course, take into consideration? Somebody's saying if we can look at gold, this is gold, by the way, ladies and gentlemen. This is gold against the US dollar on a 2 hour time frame. So we're going to look at stop losses, we're going to look at our potential targets, and we're going to look at where we're potentially going to get an indication of upward price movements. So the first two targets people can take into consideration is to go back to our sentiment line and trend line. Keep in mind those sentiment lines and trend lines are live, so they will keep developing, they'll keep moving. So it's not very simply just putting a line there. This is where my take profit's going to be, and that's the end of it. It's something you have to keep looking at and keep renewing. Now, say this is the first target, ladies and gentlemen, because it's based on this indication. We're currently on the bearish side of the market, so currently the take profits are relatively close. Now, if we're going to break above those levels, ladies and gentlemen, then at that point we can take into consideration our Fibonacci. If we're going to look at our Fibonacci, most people look at the theory where we look at out 61.8, ladies and gentlemen, on the Fibonacci level. So this is a 61.8. Now, even before looking at those targets, ladies and gentlemen, you can very clearly see here they fall exactly in line with the 38.2, which you can see here, and the 50 mark as well. Now, if I remove the Fibonacci, these are the three targets that we can take into consideration if we're going to get indication or signals of upward price movements. And if we're going to get our signals and breakouts actually get triggered. So this is something for us to take into consideration. Now, in terms of the stop loss, of course, is just below the low here, ladies and gentlemen. Now, keep in mind, if we're looking at that, that is very clearly a strong reward to risk ratio because the stop loss is 1.32% away. Whereas if we're looking at the furthest away take profit, it's 1.60. So we also have a very clear indication there. Very clear reward to risk ratio, which is more, you're risking less basically than what you're trying to earn. That's very important, especially for individuals which have a lower success rate. If individuals have a higher success rate, so for example, if you've got a success rate of 70%, which is considered quite high and above, then of course the reward to risk ratio sometimes can be negative. Also, sometimes it can be, for example, uh, hand in hand. So, for example, trying to earn 1% and risking 1%. But either way, it needs to be something which is responsible, of course, because we're definitely trading with leverage. Where, though, ladies and gentlemen, will we get an indication of upward price movement? So, this is gold on a 5 minute time frame. What we want to see, ladies and gentlemen, is also keep in mind you can scale in and scale out as well. What's scaling in and scaling out? Instead of here, you can see us exiting on one occasion. So, for example, instead of putting our take profit all the way up here, we're exiting in stages. So, for example, instead of opening 3 lots at one price and entering all three at this price here, I'm entering three different trades, one lot each. And then I exit the first trade here, the second trade here, and the third trade here. This way I'm mitigating risk, I'm spreading risk, and I'm more trading all-roundedly the asset itself. So we can do the same as well if we're trading the entry and trying to trade in. So not just entering at one price, but entering at multiple prices. The first indication, of course, definitely is going to be the breakout. This is the breakout level, ladies and gentlemen. What we definitely do want to see here, of course, is that the US dollar also continues to decline. Most likely now it may have a hand-in-hand correlation, but in the medium term, we do want it to see the US dollar decline because there is a heightened possibility that its traditional correlation will come back into force. And then, ladies and gentlemen, we can get the second trade just above the breakout of the trend line. So this is the trend line here. So we have a 100 bar sentiment here, ladies and gentlemen. So somebody is saying, should we buy or should we sell gold? Like I said, longer term on the 2 hour, we're still currently below the trend line, the sentiment line, and the RSI neutral level. So that's an indication for downward price movement. But nonetheless, short term, if we're going to get a breakout, and that's a big if we get the breakout, ladies and gentlemen, then of course, and we do see the return of inverse correlations, then of course you have the first entry here for a buy and the second entry here for a buy as well, based on these indications. Of course, we give no financial advice and investment advice. This is purely based on these indications, ladies and gentlemen. Now, a lot of people here are saying, please let's look at the NASDAQ. Please let's look at the NASDAQ. Somebody here says Euro USD. Somebody also says the pound against the USD. We definitely will look at those 100%. Let's go to the NASDAQ because I can see most people are looking at the NASDAQ. This is something which has seen a lot of volatility. Early this morning, we're looking at minus 6%. Today's market analysis, we gave an indication of downward price movement. It was minus 6%, and we were looking at, and it did hit our take profits. If you go on our website and you look at our market analysis, where we gave different indications and confirmed what indications there are out there, the 6% mark was where we stated, and we did indeed decline by 6%, ladies and gentlemen. Now, as the US market reopens, it is increasing upwards and trying to correct, but nonetheless, the very clear indication so far is downward direction, ladies and gentlemen. We're trading below the trend line, we're trading below the sentiment line, we're still trading below on the RSI as well. The question is, very simply, when are we going to get a low enough price where it's actually triggering buyers to re-enter the market? Because as the price declines, individuals will re-enter the market to take advantage of the discounted purchase price. This is why when we've had webinars in the past where individuals are trying to build portfolios, we say a lot of the time, if we look at the stock market crashes over the past 75 years, there's never been a stock market crash which has lasted forever. Stocks do increase in value again a lot of the time. Of course, there is the certain companies which become bankrupt. But if we trade in the NASDAQ and the S&P 500, then these indices technically can never reach zero. Because if there is a company which underperforms, they will kick the company out and they'll replace it with another stock which they believe has more and better possibility and opportunities. We've seen the Dow Jones do it again and again, specifically over the past few years. So, ladies and gentlemen, we're in a similar situation here, but of course, we're not going to aim at the moment for our trend line or the sentiment line, because we've seen a lot of downward indications here, ladies and gentlemen. But there is, for example, some scenarios that we can look at a correction. The first breakout that we need to definitely see, though, is a breakout of this level, because this is definitely going to be a very clear breakout level on the 5-minute time frame, for example. So actually, let's go to 15-minute time frame. You can see here that's definitely a level. If we're going to see individuals wanting to trade and speculate the upward direction, that's definitely a breakout that needs to take place. But it's still a concern because even if we do get a breakout there, we also had the breakout down here, ladies and gentlemen. So even if we do get an upward breakout, we did see a lower low, which is a concern. But if we are going to see that gain in, ladies and gentlemen, then the first target that people tend to aim for is the price gap. We saw a bearish price gap early this morning. The price gap is here, ladies and gentlemen. But we also want to see other aspects of the market change in order for us to be willing to speculate upward price movement if we're going to get such indication. The first thing we definitely want to see, ladies and gentlemen, is we're about to get the ISM services PMI. Let's get the medium impact event up as well. Here we go. So the final services PMI and the ISM services PMI both need to be better than expected. Ideally, the final services PMI wasn't better than expected. That's definitely negative for the market. So far, the stock market has increased, but if that's going to come in negative, ladies and gentlemen, is more likely again going to fuel those speculations of an economic contraction, of a potential recession. And like I said, so far the Federal Reserve has come out and said they're not going to panic, they're not going to cut interest rates and announce an emergency meeting and interest rate decision. This is what's being said by the Federal Reserve at the moment. If that changes, then of course we may see a different volatility on our charts. But so far, if that's going to come in negative as well, the ISM services PMI, then that could add to lower risk appetite and lower sentiment towards growth stocks. And don't forget, the NASDAQ is um, significantly exposed to growth stocks. This is the US bond yields. US bond yields, ladies and gentlemen, is trading 64 points lower. Now, if we go back approximately 2 hours, it was actually more than 110 points lower, so it's half that. So, to be honest, ladies and gentlemen, it has slightly improved. Like you can see here, it has slightly improved. If it continues to improve throughout the day, then that's positive indications that indeed we will see a breakout and we can take into consideration ultra short-term trades for a daily correction, not a correction onto a new all-time high just yet, but for some bullish price movement. But if we are going to see that collapse again, ladies and gentlemen, so for example, if it starts to decline to losing 90 points at the moment, we're minus 70 points. If it goes to losing 90 points, losing 100 points again, and ladies and gentlemen, that is significant. We haven't seen that in a very, very long time. That in such a short period of time, that we're going to see minus 100 points on US bond yields. That's something that we don't necessarily see quite a lot. So that's definitely bad news. Even as I'm speaking and I'm saying to individuals, be cautious of that upward price movement. The signals is still of downward price movement. You can see that those bond yields are increasing. If we go to a 1 minute time frame and we look at the NASDAQ, you can see it's retracing here. Not yet on the ultra short-term charts indicating downward price movement, but it's still definitely something there that we need to be cautious about, ladies and gentlemen. And also on the 15-minute time frame, you can see that falls in line with the resistance point, falls in line with our trend line as well. So that's definitely something we need to keep on looking at. How do you get access to it? If you just type in US bond yields like so, and you can see the 10-year US bond yield here, it'll bring that chart straight back up. At the moment, 78 points lower. The next thing, ladies and gentlemen, we definitely want to be looking at is the most important stocks within the NASDAQ. Now, there's different theories here. Some of the well-known theories, well, I'll give you two theories that people a lot of the time concentrate on. Number one is to look at the top 11 most influential stocks. Now, some people will say, why the top 11? Why not the top 10? Very simply because Alphabet has two classes of stocks. So very simply, The top 11 is the top 10 influential companies. Now, people will normally say if 70% are declining, that's an indication of downward price movement. All of them are declining, that's 100%. If we're looking at the other theories, anything above 1%, so anything above 1% is 24 stocks. Again, all of those are declining as well, ladies and gentlemen. So here we've got clear indications of downward price movement. If we're looking at the NASDAQ as a whole, then we've got stock here increasing. So one, two, only two stocks of the whole NASDAQ is increasing, ladies and gentlemen. Only two stocks. So again, a lot of indications there of downward price movement. What you can definitely do is compare the declines. So if these declines are getting worse throughout the day, then you can use that as a renewed indication of downward price movement. That is, of course, something you also can look at. So we've got three things to look out for. Number one, the top 10, 11 stocks, all red. Top 24 most influential stocks are anything with a 1% exposure and above. Again, all of those are declining as well. And we're just monitoring to see if the decline is getting worse and worse and worse throughout the day. So that's definitely something we need to look at. Now, the other thing I want people to point their attention to is everybody now is suddenly starting to price in much stronger interest rate cuts. If we were looking at a month ago in our analysis, we were very clearly stated that everybody's pricing in definitely one interest rate cut and almost 90%, 95% two interest rate cuts in September and in December. If we're looking at now, ladies and gentlemen, 91% of the market believes there's going to be a 50 basis point cut in September, not a 25 basis point cut. For by November, for there to be a whole 1%, so 50% for September, 50% for November, and then by December to be another 25 basis points. So the main possibility at the moment is 0.5% September, 0.5% November, and 25 basis points in December. If the Federal Reserve starts to come out and indicate that, then that's really some positive news at last for the stock market. And to be honest, for the stock market to see very strong upward price movement, we need to see strong news. For example, that would be very strong news. Members of the Federal Open Market Committee to come out and say there's going to be a 1.25 basis point cut over the next three interest rate decisions. In addition to that, ideally, again, we want to see strong earnings data. To be honest, earnings data has been quite strong throughout the earnings season. Nothing there's really indicating that any of these companies are going to collapse or significantly underperforming. But the decline and deterioration of employment data, of economic data, geopolitical tensions is a very big issue at the moment. If the retaliation from Iran and Hezbollah is very strong, that can really deteriorate the market, ladies and gentlemen. If it's not, though, like for example, if we go back a couple of months where it was announced and the US confirmed that they were going to retaliate and everybody should be prepared, the retaliation wasn't that bad. It actually triggered upward price movement in the stock market. The same thing could happen this time as well. If it's quite a weak retaliation and then Iran coming out and saying, that's it, we're not going to retaliate anymore, then of course they can still rebound. That could be deemed as positive news. But if it's bad, with injuries and casualties and a lot of damage, then of course it can create, again, a very low risk appetite within the market. And you can see the risk appetite within the market, ladies and gentlemen, as well. If you look at the VIX, the VIX is 35% up. Okay, earlier on today it was 60% up, so that's a massive improvement for sure. So that could be some intraday indication of some upward correction, but nonetheless, that's very high. It's been high for a very long time, and again, that's definitely indicating low risk appetite within the market. If you look at all stock markets today, the Nikkei 225, Russell 2000, the NASDAQ, S&P 500, the DAX, the Dow Jones, everything is down, ladies and gentlemen. Everything is red. So again, another indication there. But we definitely want to see positive earnings if there's going to be any sort of correction upwards. Very important will be Amgen, Airbnb tomorrow. Those two announcements will be specifically important for the S&P 500 and the NASDAQ. For the Dow Jones, Amgen and Caterpillar, specifically Caterpillar, would be very, very important. That's Tuesday, that's tomorrow. Also, Disney will be very important on Wednesday. If we want to see a chance of positive upward price movement for the Nasdaq and for the stock market, all those three need to be positive. Let's look at the announcement of the S&P of the ISM Services PMI. It's coming more or less as expected, slightly higher, more or less as expected, ladies and gentlemen. It has triggered a breakout. So this is where we stated the signal will be if we get a breakout here. And the target, ladies and gentlemen, that we stated will be at this point here, ladies and gentlemen. So that's something people can look at. If people are worried about speculating against the trend, that's 100% understandable. There's two things that you can take into consideration. You can look at the Fibonacci levels. So Fibonacci levels here, and instead of aiming for that resistant level, you can aim for the 23.6 level, which is here. Or alternatively, you can aim for 50%, ladies and gentlemen. So instead of trading and trying to earn 1.60, you can instead aim for 0.80, which is here, ladies and gentlemen. Well, it's already hit that take profit, more or less. It's almost at that take profit. So if you haven't already entered, based on the signal that we looked at before, then if you're about to enter, that's an exit that you can take into consideration potentially as well. So that's within regards to the NASDAQ, ladies and gentlemen. Definitely something you need to be cautious about, though. Again, if we get escalation from Iran and Hezbollah, especially if it's a very strong escalation, keep in mind that the US, the UK, France, and other countries have already told people to leave the Middle East. So that's something that hasn't previously happened in recent days and recent months. So if that's an indication to that basically something big is going to happen, bigger than what people think, then again, that really can pressure the stock market. That's something, though, that we're going to look at the developments as is actually happening. Now let's look at it. Some people said to me, the cable. Some people said the Euro USD. What I will say in regards to the Euro USD, ladies and gentlemen, is that of course the spread is extremely low. It's extremely, extremely low. Even when there's a lot of volatility, we're looking at on average 1.6% on a more expensive account. So again, that's something for us to take into consideration. But here we can see we're definitely above our trend lines, our sentiment lines. The RSI, though, here, ladies and gentlemen, is indicating divergence. So the fact that there's divergence actually indicating potentially a correction. A correction would be to here. Like we said before, some people may not want to try and target the full correction itself. That's 0.70%, so basically 35%. Your target will be here, so 50% of the overall correction, ladies and gentlemen. So here, and again, that's more than enough price movement for a short-term intraday trade. Where we're going to get a continuation signal for that downward price movement, you can switch on to a lower time frame here. There's two things we can take into consideration. If it retraces upwards, we can have Fibonacci. So for example, if it retraces to here, ladies and gentlemen, then what do we actually have? We have a lower low. So if the retracement loses momentum here, this is the low, this was the previous low, we got a lower low. So that's an indication of downward price movement. If it's a higher high, then that's a no indication and it cancels out the fault of downward price movement. So if we do get retracements, that is an opportunity still, ladies and gentlemen, because as it gains momentum again and we go to the 65 level here, if it breaks below the 65, then that's an indication for speculating the continuation of the downward price movement. So that's something people can take into consideration, of course. Otherwise, ladies and gentlemen, we can wait for the crossover. I'll change the color of this so it's easier for you to see. I'll make it orange. There we go. So as the orange crosses the green below, so a bearish crossover, like for example what we saw here, then that can be an indication as well of downward price movement as well. The only thing I would be cautious about here, if you are going to speculate downward price movement, then what I would definitely look at is if you go to FinViz, ladies and gentlemen, here, how do you get access to this? Very simply, type in finviz.com, then you go to futures, go to currencies, there we go. You want to see, if you're going to speculate the US dollar to increase in value against the euro, ideally you want to see the euro index decline. Okay, the euro index at the moment is high, is quite significantly high. So there may be more benefits if you believe the US dollar will correct and increase in value. So instead of speculate against that the US dollar will decline against the euro, the US dollar will increase in value against the euro, which is also increasing in value. You're speculating two currencies increasing in value, so that's basically conflicting each other. Ideally, you want to speculate one currency is increasing against a currency which is underperforming. So if you believe the US dollar will increase in value, there's more benefits to doing so against the British pound, which also has a very low spread because that's declining against the market, but also definitely the Australian dollar and New Zealand dollar. The only thing to be cautious about that, though, is very simply that they have higher spreads. Of course, you can trade on our swap-free account. Of course, you can also trade on our zero spread account as well, which is ultra low fees, ladies and gentlemen, something very competitive within the market. So, of course, if you do want to trade the Australian dollar, New Zealand dollar, where traditionally they're more expensive, then of course you have benefits of trading on those accounts, ladies and gentlemen. And of course, if you feel that you need extra assistance in regards to this, of course, you still have copy trading, ladies and gentlemen. And also, as we've been speaking over the past 15 minutes, you can see that that decline in the bond market has started to slightly correct. It's still very early on. We're still 49 points lower. Previously, we were 78 points lower. So it's still very early on. We still wanted to keep on correcting. And there's still the possibility of it suddenly declining again. But of course, that's something that we need to wait and see, ladies and gentlemen. Some people says, how do we know if the stock market will not correct and actually start declining? You can look at the breakouts. You can look at the Fibonacci levels. If we go back to, for example, the S&P 500, you can see here we still get signals of downward price movement. What can you look at? There's different things you can look at. You can either look at the retracement of the low and the high here, in which case the 65 level is here, ladies and gentlemen. So if it's going to break below this blue line, you can use that as an indication of downward price movement. You can use a second trade as well at the breakout point here. The main thing we want to see that it continues to remain below the trend line, the sentiment line, and the 50 level on your RSI as well. So we've spoken about quite a lot of things. The last thing I will say, like I spoke last time as well, is the Japanese yen. If we look at last week and the week before that, when we had live analysis, we said two things about currencies. Number one, the Bank of Japan unexpectedly increased interest rates. A lot of people think that that was expected, and some economists, after the announcement, said they expected that. It wasn't. It was unexpected. Yes, we expected them to hike again in 2024. It was unexpected that they would hike at that time. So that massively supported, and I'll put the British pound against Japanese yen here for you in regards to that. Massively supported the Japanese yen. Another thing we said last week and the week before that, is there is a possibility of the Japanese yen being the best performing currency of the second half of the year. Why? Because we unexpectedly had an increase in interest rates. It's the second time they've increased interest rates. All central banks are expected to really start cutting interest rates now. The Japanese yen is the only one, the Bank of Japan, sorry, is the only one which is increasing interest rates. And in addition to this, there's of course the lowering and filtering down of the carry trade in Asia as well. So that's definitely something we can take into consideration. Definitely the best performing currency of the past 4 weeks, ladies and gentlemen. If we look at currencies and we look at the currency, the performance over the past month, here we can see the Japanese yen. It's up 11.5%, the best performing currency of the past month. The second best is the Swiss franc, which is up just 5%, just above 5%. So Japanese yen is more than double that, ladies and gentlemen. So that's definitely something to keep an eye on. Other than that, ladies and gentlemen, we've spoken about so much. Definitely something you need to keep an eye on. We definitely need, if we want the stock market to correct, we need a weak retaliation from Iran and Hezbollah or none at all. We also need, ladies and gentlemen, positive economic data. We want strong indications from the Federal Reserve that they will consider more interest rate cuts. And also, we definitely want positive earnings data from Amgen, also from Airbnb, from Caterpillar, and from Disney as well. All four, ladies and gentlemen, if you want to see a real possibility of upward indications, sorry, upward price movement of the stock market. The question at the moment really is the price low enough for investors and shareholders to purchase the discounted price? To answer that question, we really need to see what's going to be the retaliation and reaction from Hezbollah and Iran, ladies and gentlemen. Other than that, let's end today's session. I can't see any other questions. People asked about gold. We looked at gold. People asked about Euro USD. We looked at that. People said the cable, the NASDAQ, we looked at all of those assets. We've also looked at the Japanese yen, which people didn't mention. So I can see everything has been answered and looked at. Of course, if people have more questions, feel free to get into contact with me at any time. We have a lot of educational material which is offered for free by HFM. Don't forget about the copy trading, which is also offered to you, and you can get more expertise from other traders. And in addition to this as well, don't forget the zero spread account and swap free trading. One of the few places within the market where you can trade swap free. So let's end today's session. Enjoy the rest of your day. Good luck. Hopefully you found today's live analysis educational. In the meantime, trade safe, trade responsibly, and if you need any assistance, feel free to get into contact with us at any time. In the meantime, though, goodbye and enjoy.